guests joining in to take us through, what's really going on.
Oh, and let's welcome both of them. We do have Manish Hathiramani joining in. Alongside that is Gautam Baid as well. Gautam will obviously speak about the fundamentals of the market, and typically, the market bottoms out when the panic is at its peak. Are we there or not? But for the very near term, let's get in, a chart check on the Nifty. Manish has been fairly instrumental in calling, important levels on the frontline index. So first we go across to Manish and then Gautam. Manish, 25,000, we're below that, but market's trying to make a mild attempt to recover above those levels. We're below the 200-day moving average as well. Your call on the Nifty.
Hi, Mangalam. Thank you so much for having me on the show. Well, just to go a little backwards, last week when we were on this channel, we did speak about Nifty being sideways with a downward bias. Thereafter, we broke the lows of 30th of December. We were then talking about a target of about 25,150. That has got achieved today. Now, what I'm really concerned about is this whole band of 24,950 to 25,000. It's only 50 points when we talk about it, but it's exceptionally crucial. If we fail to close above these levels and we spend a couple of days trading below these levels, I feel the Nifty can go down to 24,500 to be precise. The upside resistances are now capped at 25,600 to 25,700 levels.
So upside 25,600 to 25,700. Downside, under what conditions do you expect it to go between 24 to around 24,400 to 24,500?
If we close below 24,950.
If we close below 24,950. Till then, it remains a no trading zone. Gautam, let's come to you. Fundamentally, what have you made of the earnings so far? What's the sense like right now? There is a fair amount of uncertainty, but I'm sure, there are a few pockets which offer value in this correction because, as they say, right, you become greedy when the world is panicking.
Well, that's very true, Mangalam, but you have to be greedy in the right places. So this is the market for bottom-up active stock picking, and you have to focus on areas which have got good earnings growth visibility for the next 1 to 2 years, because those are the very stocks that will bounce back to all-time highs as soon as this ongoing correction gets over. So look at the microfinance cycle turning around. You can look at microfinance focused small finance banks. You can look at gold financiers. You can look at silver producers. Those are the kind of earnings which are showing strength. You're already getting initial indications of strength and good earnings from the auto ancillary space as well. Look at the kind of numbers reported by C8. I think that's a precursor of the very good string of earnings which will come out from many auto OEMs and auto ancillary names. So focus on bottom-up stock picking, be very selective, because the broader market this year is also expected to be pretty narrow. Although this is a very good juncture to put fresh capital to work, the percentage of stocks in the NSE 500 and BSE 500 below their 200-day DMA is now approaching 30% and below. Typically, this is the area where the broader markets bottom out, and from here on, selective stock picking should give you very good results.
We'll get to those selective stocks in just a bit. Manish, Gautam, stay on, because one of the other important to our guests, Manish, Gautam, thank you for waiting by. Manish, to you again. Better part of the start of the year, the Nifty's losses were capped because of the Nifty Bank's outperformance. But now with the Nifty Bank also breaking below those important 59,500 levels on the downside, where do you see that going next? And would that be one of the reasons why the Nifty does end up eventually falling towards that 24,500 mark?
Well, Homer's Bank Nifty was showing some kind of resilience when it was closer to the 60,300, 60,400 mark. We failed to cross that, and in fact, we took a U-turn from there. There was a strong support around that 59,100, 59,200 levels. That has also broken down. We are now expecting the Bank Nifty to test 58,100.
Well, Manish, I just broadly wanted to get a sense of, whether you think we're seeing a shift from what is a corrective phase to a sustained downtrend. And how much of a role do you think the rupee is playing in this downfall? I mean, is it adding to that risk-off sentiment?
Well, I won't be able to comment much on the currency because from a technical perspective, we are not correlating the two. However, we are in a definite short-term bear market. I would be looking at any kind of rise to look for opportunities to go short. As I said, unless we are not able to get past those capped resistance levels on the upside, we will be looking for short signals.
All right, you would be looking for short signals. For now, the Nifty is actually, managed to recover above that 25,000 mark, holding slightly above the 25,000 mark by just a smidge, still about 100 points below the 200-day moving average. That's as far as the technicals are concerned. But, Gautam, you did say that this is the time to perhaps look for opportunities in some of these gold financiers, NBFC spaces, also a lot of these silver-related plays. We've seen those stocks do extremely well. I just wanted to understand from you if you have any inkling on what's the kind of cash that the industry is, the deployment industry is sitting on the average, and what about you?
Well, you're talking about the US markets, Mangalam, or the Indian markets?
The Indian markets.
In the Indian markets, you're seeing very selectively, certain mutual funds like Parak FlexiCap, for example, is sitting on more than 20% cash. There are other mutual funds who are holding various levels of cash. So basically, the cash levels is a outcome or a byproduct of the opportunities which the particular fund manager is seeing in the market at a given point of time. So the cash levels will vary as per fund house. As far as our PMS is concerned, at Complete Circle Stellar Wealth, we are fully invested in the current market and we have deployed all the cash that we had over the last 1 month. So I think we have got enough opportunities to generate alpha from here.
And what's client behavior like right now? Because, from the Indian equity markets standpoint, the SIPs have been fairly resilient, over 30,000 crores in the month of December. Before that as well, for the last few months, between 27, 28,000 crores. But typically, it so happens that flows follow markets and not the other way around as usually is expected. Do you think because of this underperformance, because of this decline, the SIP investor will start to waver? I mean, have you seen signs of that in PMS investing? At least we get a inkling into what the investor mindset or behavior is at these levels.
Well, Mangalam, there's a common investor tendency called recency bias. So investors tend to chase what has worked in the most recent past, in the most recent few quarters. So you're seeing a lot of rush towards gold funds, silver funds, and ETFs. And many people are going to, basically reduce or stop their SIPs. This happens in every bear market cycle. The investors tend to, basically go towards, things that are working in the present moment. So there's definitely a shift happening which is right now very subtle, but which is underway. And many retail investors in particular, as well as some HNI investors are now exploring the foreign equity markets. They're also exploring gold and other precious metals. So that shift will definitely happen. However, the underlying flows into equities continues unabated. However, for the broader markets to outperform and to get back investor interest, the avalanche of IPOs, the primary market has to slow down a bit because that has sucked out a lot of liquidity from the broader market. So the retail investor sentiment towards mid cap, small caps will revive only when this particular category of the market starts outperforming again. And mid cap, small caps as an asset class requires liquidity to outperform. So unless liquidity starts flowing back to the small cap, mid cap space, it will be a very narrow market till that time.
Thank you so much for detailing all of those factors for the market fundamentally as well as chartically. Manish, Gautam, thank you so much for joining in. There's some sense of relief which has come by on the markets from the panic lows that we saw. So the Nifty has actually recovered about 135 points from the lows. And for the Nifty to recover, you have to have the usual suspects putting their hand up, right? So from the lows, Reliance has, moved about 0.8% higher. And we have HDFC Bank as well, which has recovered about 0.9% from the lows. Most of them are still in the red, but there has been a minor recovery. HDFC Bank off lows, Reliance, the intraday chart comes up for you as well, off lows, and that mirrors the intraday chart of the Nifty. Obviously down 200 points, but significantly off lows as well. Where this goes from here and this smidge of a recovery, does that get sold into once again or not is the big question. We'll take a short break, come back, focus on the markets, a lot of stock-specific action. Stay with us.